Okay, so welcome to the most hated rally in history. Ever since April 2nd, when Trump announced his Liberation Day and started hitting everybody with all these tariffs, the market sold off tremendously, and around April 7th, it hit its low. But since then, all of the indices, NASDAQ, Dow, S&P 500, have all rallied, maybe not back to their highs, but have certainly rallied back from the sell-off. But yet, everyone is still way too bearish. So in this video, I'm going to talk a little bit about how to play this most hated bull market. And at the end, I'll suggest a couple stocks that I think are really good plays for the ride back up. And I am probably a little bit more bullish, probably a lot more bullish than most people are at this point. I'm going to tell you why in this video. Then I'm going to have a couple clips from Tom Lee of Fundstrat. Is going to come on from some recent clips where he appeared on CNBC, and he'll also give his views which support my views. Okay, so at the bottom of COVID, everyone hated the market. Sell-off of 2022, everyone hated the market until it hit new highs. In both cases, everyone was way too bearish, and most people miss what in both cases were historic rallies. And I really believe the same thing is really happening now around tariffs and all of the uncertainty surrounding tariffs. Both the bond and the stock market have been very volatile recently. And as I said, even though the stock market has largely come back, everyone is still really bearish, and many prognosticators are calling a top in here, where I think, even though the market will continue to be volatile, I think that the market is really setting up for a nice rally and another bull market. The other factor that I think is important to keep in mind is there's approximately $7 trillion of cash on the sideline, which can be deployed and could further fuel the rally. Now, there are a number of things that I think are being underappreciated by the market right now, and I want to talk about them right now. The first one is deregulation. Now, there are a lot of areas of deregulation that Trump is pushing, and I don't think the market is really appreciating the benefits to both the economy and the stock market that are going to result from this push to deregulation. I mean, you're seeing massive deregulation in all of the policies that Trump is putting forward. These are going to benefit oil, for example. You know, drill, baby, drill. He's releasing federal lands in Alaska and other places to do leases. This is all going to increase supply of oil, which is going to make oil prices go down, which is going to be very bullish for the economy. Second thing is banking. Now, banking is a highly regulated industry, and he has been rolling back regulation in banking ever since he got into the office through executive actions and through legislation that is in this, big, beautiful bill that he's been pushing. That's going to benefit the banking sector because they are incredibly regulated, and to the extent that they can get free of some of this regulation, it's going to cause them to be much more profitable. And then lastly, technology. The last administration was very negative toward technology. The FTC was completely negative on all mergers and acquisitions, and they went after, Google, Facebook, everybody. And deregulation coming in is going to greatly help technology, both in innovation, in their profitability and their growth, and I think the market is just completely underappreciating how this is going to benefit business going forward. Okay, the second area is something that's been really well talked about: the tax benefits in the big, beautiful bill. Now, we don't know what the final bill is going to look like because it hasn't made its way through the Senate yet, but once it gets through the Senate and comes back to the House, we'll have a better understanding of it during reconciliation, which is when they reconcile the two bills. There's also been a lot of chatter in the news media. The news media is uniformly negative on anything that Trump tries to do. So anytime there's any hiccups legislatively in this bill, the news media is all over with all this negativity, putting into question if it'll get passed and all this kind of stuff. But the passing of this bill, if it gets passed in the form that it's currently floating around in, will have a lot of benefits to the economy and therefore to the stock market. First of all, it makes the 2017 tax cuts permanent, which, if it doesn't happen, will be very bad for the economy. So keeping those tax benefits, those tax breaks rather, in there is going to be very positive for the economy. Secondly, there's a lot of incentives in there to encourage small business formation and to help small business. This creates jobs, this creates economic growth, this benefits the economy in many ways, and I don't think the market's really appreciating some of the benefits that are in this bill. Then, largely through the tariffs, there are incredible incentives to manufacture in this country. I mean, with the tariffs in there, you bring in parts or you manufacture in Mexico or Canada or China, you're going to get hit with a tariff. Whereas if you manufacture in the United States, you're not going to be getting hit with those tariffs. So that provides a very strong incentive, along with a lot of the tax benefits that are in the bill for manufacturing here. It's just going to cause a tremendous amount of incentive for companies to make things here. Now, let's be honest with ourselves. We're not going to be making, T-shirts and low-level items here because it's just going to be so much cheaper to do it overseas. The more high-grade, more complicated things to manufacture, like cars or technology or things of that nature, it's going to make sense to build here, and that's going to create jobs, and it's going to create incentive for companies to build more things in this country. And another thing which I don't think can be understated is the negativity in the news media. I mean, look, if you're a person or an investor and you turn on the TV, and unless you're watching Fox, which tends to lean more to the right, literally every news media outlet, NBC, ABC, MSLSD as I call it, whatever, they jump on Trump for every single thing he does. Anything that even has a hint of not working out, they amplify it. So the negative vibes that you're bombarded with constantly from the news media against everything that Trump does, creates kind of a negative spin on everything. So it's a little wonder why people are tending to be, bearish, because literally everything that comes out of the news media is negative toward everything Trump is trying to do. So that's another factor. An example of this was the other day, there was I saw a couple stories about fentanyl seizures reached an all-time low, okay? And it's not important what the numbers were, but they were talking about fentanyl seizures being down, and like every one of these mainstream, lamestream media outlets were completely mystified as to how this could possibly be happening, right? I don't know where they've been the last 4 months, but, the Trump administration has been like going full throttle, 100% in on reducing fentanyl traffic, and how they could not understand or give Trump some of, if not all of the credit for it. It's just beyond me, but that's the world that we live in, and it contributes to the psychology of the market. So I want to jump now to a Tom Lee clip, and let's take a look at that, and I'll make some comments, and we'll come back.
We still think dips are going to be pretty shallow. It's still the most hated V-shaped rally. I mean, the COVID rally was hated until we made new highs, and the rally from the fall of 2022 was hated until we made new highs. It's not any different this time. Hedge funds, I think, have really been very cautious. They were forced to sell near the lows, and we know there's $7 trillion cash. So while a lot of people are calling a top, I actually think that this is more of mid-cycle kind of start of a new bull market.
Okay, so there he calls it a mid-cycle start of a new bull market. I tend to agree with that. I think that's spot on in the sense that this could all be setting up for further advances. Now, it doesn't mean that we're not going to see a lot of volatility. Every time the tariffs are in the headlines, or anytime there's negative news on China, you're going to see volatility, and I would expect that to continue. Okay, then he goes on further to say this.
Well, I mean, if I just did a relative comparison, when I look at the company outlooks now compared to February 2025, I actually think the outlook's actually better. When we look at 2026, I think we have better visibility on deregulation and potential tax benefits. I think the tariff risk is actually diminished compared to February 2025. And while the Fed's been on hold this year, I think that there's a case to be made. They're going to be dovish next year given what's happening with housing, and I think the trend in core inflation. And that's more important to markets is the Fed in 2026 than what the Fed does the next couple of quarters. So, I mean, overall, I think it means PEs could go up.
Okay, so I think he raises a very important issue there, and that's the issue of Fed policy, which I didn't touch on earlier. I think with employment softening a little bit and with continued improvement on inflation, which we have seen recently, I think we're getting into the zone where the Fed might be looking at further rate cuts, okay? And if you see a more dovish Fed in the future, that's going to be very bullish for stocks. This hasn't happened yet, but I can see it sort of going in that direction, and that's a very good point to make now. Okay, so I promised at the beginning of this video that I would provide some input as to how to play this market. I think it breaks down into two areas. One would be the kind of person that isn't involved in individual stocks. If that's you, then what I would basically do is I would look for any sell-offs, and then I would go into either the QQQ, which is basically the NASDAQ, or I would go into the TQQQ, which is the triple leveraged QQQ, if you want to be more aggressive. And there you're getting basically the Mag 7. Okay, you're getting basically the top technology stocks. And if you buy into a sell-off, if you buy the triple leverage, for every 1%, the NASDAQ goes up, this will go up 3%. So you're 3 times leveraged on it. And then if you're more conservative, do the QQQ. I mean, that's what I would do. I believe the Mag 7, you want to play the Mag 7, and I think that they're going to greatly benefit by a continued bull market. Okay? If you want to look at individual stocks, this is by no means a definitive list, but these are 3 that come to mind that I like right off the bat. Okay, one is Apple. Okay, Apple has suffered quite a bit under this tariff policy, and they make a lot of their iPhones in China. So as a result, there's been a lot of concern and skepticism over their growth prospects. But I think that once the tariff situation settles down, they're going to be, again, a very good stock to be in. They sold off tremendously. They're approaching their 50-day moving average now. So it would still be a fairly attractive time to get in. And that would be one stock I would play. Another one, of course, is one of my favorites, which if you've watched the channel, you would know I love NVIDIA. Now, NVIDIA sold off. It got down to 96, 97 during the height of the tariff mania, or I should say fear. And it's now rallied back to about 141. It's a little high in terms of its trading range right now. So I would wait for a sell-off. So my recommendation is buy on the sell-offs. If it gets down again to 100, I would be buying with both hands. But I've said previously, and I think I still agree with this, anything below 120, I think is an attractive place to get in if you're a long-term holder, which you should be in NVIDIA. And then the next one is one of my all-time favorites, Amazon. Okay, I think Amazon has just a tremendous future, completely dominant. Everyone knows Amazon. I don't have to explain to you what they do. But in April, they were down to like 167. They have largely rallied back to, they're way above the 50-day moving average, and they've rallied back. They're not at the high yet, anywhere near the high, but they're at the higher part of their trading range. So probably not a great time to jump in right now, but I would continue to monitor the situation with the inevitable volatility that's coming up. You'll get another chance to buy Amazon. And I would say, as I look at this, 167, screaming buy, buy with both hands. I think if you get below the 50-day moving average, which is around 185, I would also be a buyer, because I think this is a tremendous long-term hold, and I think you got to be long Amazon if you're into individual Mag 7 stocks, okay? And of course, the last one that I'm not going to talk a lot about, which I also love, is Palantir. Another way to play AI along with NVIDIA. I think NVIDIA and Palantir are the two most important companies in the AI space. Palantir, of course, went through the same kind of pattern that the others I mentioned did. Sold off tremendously during the China scare, and the tariffs, and largely has come back. But again, I would also be buying on the dips in Palantir. Well, that's really what I had for you today. I do think that there's way too much bearishness out there, and that historically has always set up for another bull run. And I think this is going to be no exception. Of course, we have to get through a couple things, like the tax bill's got to get passed. We got to resolve tariffs and some of the other things I mentioned on this video. But once that happens, I think we're going to be in a very good position, and you're going to be very happy you were long during this period. All right. Well, thanks for tuning in. And if you got value out of this, please like and subscribe. And I'll see you on the next video.